Good morning, everybody. Good morning, everybody. Sorry for the delay. We had some technical issues. I hope you can hear me and see me. This is the live market open for Thursday, February 2nd. I'm Yohay Elam, a Forex Financial Market Movers podcast, doing the show as usual for FX Street. Today we have, so many market movements to talk about. Just one big one. The dollar crashed. That's the big recent development. We'll talk about different charts, different levels. The next 24 hours, which are going to be busy as well. And of course, your questions. If you cannot see the chat box on the screen, please go to the address here, tlk.io/fxrate-forex-live-video. Let's begin. Sorry again for the delay. These things happen, and that's it. Okay, so I hope everybody's here. I see lots of you in the room. Looking forward to your questions. Okay. So we had the dollar crashing. We had big market movements yesterday. Where do we start? Well, first of all, we had the weakening of the dollar during the morning a bit, and then when we had the ADP report, the ADP came out better than expected. The reaction was not so much dollar positive, not against safe haven currencies, not against commodity currencies. But it was sort of mild, okay? Then we had Bill Dudley of the New York Fed, number 3 at the Fed, I would say. Yellen is number 1, of course. Then Fisher, then Dudley. He went a bit dovish, so we have to watch and see. It's not so surprising. He's not a big, he was never a big hawk, but it's important to remember why his words did matter, okay? His words did matter because back in August, when the Chinese stock market crashed, Dudley talked to us about the fact that we might have to wait and see. The fact that perhaps the Fed will wait, and eventually the Fed did wait. Okay, they did not hike rates in September. They did wait for December to make the first rate hike. Okay, so. Maybe now he gave us the final hint that there will be no rate hike in March, the second rate hike, okay? But what really killed the dollar was the ISM non-manufacturing PMI, the report for the services sector. Hi, everybody that joined us right now. Sorry again for the delay. I'm talking about the dollar crash. So what really hit the dollar hard was ISM non-manufacturing PMI. This led to a big fall all across the board. Okay, let's talk about the numbers a bit. So we had ADP, NFP came out 205,000, 10,000 better than expected, and 10,000 revised higher for last month. ISM non-manufacturing PMI, the services sector, was terrible at 53.5. This number is missing here. And even worse, the employment component fell over 4 points to 52.1. Okay, this is a very ominous sign for tomorrow's non-farm payrolls, an indicator that the U.S. services sector is hiring at a much slower pace. Even if this does not materialize in the actual jobs report, it means going forward things can get worse. Good morning, everybody. Sorry again for the delay. Now we're back talking about the dollar fall, mainly Dudley, and the employment component of the ISM non-manufacturing PMI. Let's look at the chances for the rate hikes and then talk about the charts. Well, actually, it's more or less the same. Grand majority against a rate hike. Okay. Now let's look at this chart. Why is it a bit messy? I think we talked yesterday about this triangle, this wedge that Euro-dollar trades in. Okay. And talked about the pair being slightly higher in the range, but not really knowing where it's going. Okay. Yesterday we got the full answer. Okay. We had a sharp break to the upside, breaking above this downtrend resistance, breaking above 110, breaking above the post Draghi high of 110.50, 110.60 over there, reaching a high above, where was it exactly? 111.45. A huge jump. We're back to the levels in Euro-dollar last seen right here back in October. Okay, really a dramatic move from Euro-dollar. It went 2% to the upside, okay? But euro dollar, of course, was not alone. Let's get back to the charts we normally use here. So this is also on this chart, the move in euro dollar. Very frustrating range for a very long time, and then boom, we went higher. Okay, this morning we're seeing a bit of a consolidation. Pairs getting used to new levels, found support at 110.70, 111.40, maybe 111.45 is support, is resistance. Okay, so this is the new range for euro dollar, much higher ground, 111.45 to 110.70. Further above, we have 112.15 and 112.90. Okay, hope everybody can hear and see the charts. And sorry again for the short delay. So that we're talking now about euro dollar. Dudley and ISM non-manufacturing PMI killed the greenback. Okay, let's move on to the pound. Also here, quite a nice rally, but the pound has not been in frustrating ranges. It was on the move. We had it yesterday fall, sort of slide just a bit. Well, the services PMI in the UK was as expected, nothing really significant. The pound still has some backwind from the EU UK deal, and then it got cable got this boost from the crash of the US dollar. Boom, we went all the way up to right here, 146.50. Currently, we're under 146, some kind of consolidation. This line perhaps should be updated to here. 145.60 to 146.50 is the current range, a much higher range. Also on cable, we're trading, well, at the highest level since January, so it's not that dramatic, but the pound suffered so much from the dovishness of the Bank of England, from Carney's heavy hand, from Carney saying it's not time to raise rates. So now the pound is also making a nice comeback, okay? Dollar yen, this is quite amazing. Only on Friday, that's only 6 days ago, we had the Bank of Japan going negative, cutting rates below zero, rates on excessive deposits. That means deposit rates from commercial banks in Japan. We had it jump all the way to 121.50, and now it's all the way back. Currently 117.75. Yesterday we had it fall during the big crash all the way to 117. Basically, we're back to the drawing board. Kuroda and Japan must be extremely frustrated with this. And yeah. Okay, I have a question here from... Yeah. About, well, a few comments here. One about Draghi's speech. Draghi began talking a few minutes ago. In his recent speeches, he didn't say anything new. Let me try to see if I can grab a few headlines. Okay, let's see what Draghi does say. He does say that global forces are holding down inflation. Not new. Of course, that's also what he said in the press conference. Let's look at the euro-dollar chart while we speak about Draghi's speech. It seems that the euro is recovering a bit from the small correction during Draghi's speech. Draghi began speaking at 8 GMT when the show begins. Yeah, so, but I wouldn't say it's a big jump. Well, not insignificant either, about 20, 30 pips. So Draghi says that no risks, no reason for permanently lower inflation, still keeping his head high. He talks about that governments need to do more. We already heard that as well. He shows determination. The ECB will not surrender to low inflation. Very determined Draghi. And that we're ready to do more. Even says that if we need to adopt more measures, the risk of side effects would not stand in our way. The risks of acting too late outweigh the risks of acting too early. All in all, this sounds quite dovish to me. I mean, he's determined to act. I would have expected these words to push the euro down, but it doesn't seem to have this effect. Let's see if I can grab another headline. Most of it is just a repeat of what he already said. The challenges that are caused by monetary action can be mitigated. They do not justify inaction. All in all, it's basically the same. Euro dollar is bouncing within the range. Let's see if we have similar moves. Yeah, we have a similar move also in pound dollar. So I would not say that this small bounce in euro dollar is related to what Draghi is telling us. Okay. Another comment here, a question about the Bank of England. Yes, that's the main event for today. We have a break from US news. We do have some US news, but it's mostly about the UK. It's Super Thursday in the UK. Okay, well, we have the pound chart. Let's talk about that just a bit. Okay, so every month, the Bank of England makes its rate decision. In the past year or so, or 6 months or so, it made a change. It releases the meeting minutes at the same time as the rate decision, okay? So we have, we also know what the members talked about, the full text, okay, not the full, but sort of the summary of what they talked about. And most importantly, for the immediate reaction for the pound, we have the voting pattern. So in the past, well, I think since September, we had 8 members, including Governor Carney, voting for no change, and the Bank of England didn't change rates in, well, 7 years or so. But we had one member in the past 4, 5, 6 months, Ian McCafferty, voting for a rate hike, okay? He's been the hawk on the MPC and the Monetary Policy Committee. Let's see if he continues voting against the majority, or if for a change, because of the weaker data, because of the slowdown in wages, we have a unanimous 9-0 decision against raising the rates. If we have this kind of thing, then this means this could hurt the pound immediately. But then, of course, we'll have to read the meeting minutes as well. Let's see if they're more dovish or more hawkish. And it's Super Thursday because once a quarter, the Bank of England also releases the quarterly inflation report. And that's an already much more detailed document with forecasts for the future. They make forecasts every 3 months. Let's see how they foresee inflation, how they foresee jobs, everything else. This could also, I expect this to be dovish. So it could bring down the pound. The answer to your question is yes. They did it recently. They could do it again. If they're very, of course, optimistic, it could be positive for the pound. But I believe that they will try to, they will paint a more cautious picture along the lines of what Carney said. It's not the time to raise the rates. Worries about the global economy, worries about the Eurozone. Of course, something they'll have to say a bit more carefully is that there are worries about the Brexit, okay? So this week we did hear about a deal, but this deal has to be signed and has to be also passed in a referendum, probably in the summer in the UK. So, of course, Carney and his colleagues will not want to get too political, but of course, the uncertainty about Britain's participation in the European Union also has an impact on the pound. Okay, so I believe they'll be relatively dovish and they could hit the pound. So the decision by the Bank of England is at 12 GMT. We will begin a coverage, Valeria Bednarik and I, at a quarter to 12 GMT. Okay, it'll be about half an hour or so, giving you the fast preview, analyzing the news, the impact, the charts, and something like that. After we get the rate decision, no changes expected, the meeting minutes, perhaps we'll have a surprise in the voting pattern, and the quarterly inflation report. We also have a press conference from Carney, but he isn't expected to say anything that isn't in the very, very detailed report. But perhaps, who knows, perhaps we could also have an impact from that, okay? So, yeah, so this is the chart of the pound. Current range, 145.60 to 146.50. Okay, we talked about the euro and Draghi. We talked about the pound and Carney. We talked about the full reversal of the yen. The Bank of Japan must be frustrated. Let's talk about other pairs. Dollar CAD. Also here it was quite a day yesterday for the Canadian dollar. First of all, the trend continues. The Canadian dollar is on a comeback path. The peak was just before the rate decision in Canada, when the Bank of Canada right here decided not to cut rates. It's created this head and shoulders pattern. Eventually we had a fall. We also had a recovery in oil prices. The very curious thing that we had yesterday is that oil inventories actually were terrible. I mean, terrible for oil. Okay, they showed a huge rise in inventories of crude oil and also a less than expected fall in distillates. Okay, so also in the raw product and in the final product, it's bad news for oil, just too much oil out there. What was the immediate reaction? The immediate reaction made sense. The immediate reaction was a fall in oil prices below 30 once again. So yesterday we had oil prices settling above 30 right here. And then when we had the news about inventories, we had a dip under $30 to just under $29.50. But then immediately we had a nice recovery. And then we had a continued recovery. And currently we're at 32.33. Okay, we really don't know if there's going to be an OPEC meeting. We don't know if OPEC is able to decide on anything on a cut. We don't know if Russia and Saudi Arabia are able to cut. Okay. Anyway, but sort of perhaps the mood in markets about the Fed not raising rates, perhaps this also gave a backwind to oil prices. So this morning we're seeing a small strengthening, a small weakening in oil, and that has an impact on the Canadian dollar. But all in all, look, we're at the $32 handle, which is, in comparison to recent weeks, relatively higher. Okay, all in all, the Canadian dollar is certainly supported. That means dollar CAD is lower. We're already 900 pips below the highs that we've seen just a few weeks ago. 137.60. I see 137.87 as resistance. 140 is, of course, another line of resistance. 139 on the way. Let's put another line here on the low that we've seen yesterday. Earlier today, 137.20. I see here another question. Can we focus on Draghi, ECB, Eurodollar? Interested to hear some of your thoughts. Yeah, we talked about Eurodollar just a bit, but we'll talk about it again. Talked at the beginning of the show. I'm sorry again that we began a bit late. So all in all, Eurodollar is strengthening. Draghi didn't say, as far as I know, anything earth-shattering. We'll talk about that once again quite soon. Let me just complete other levels, other charts. Aussie dollar, in terms of pips, it didn't move so much, but it did rise as well, around 2% yesterday. We're currently at a high range between 71.50 to 72.20. Okay, currently at 71.80. We had a bounce yesterday from the lows at 70, and from there, the only way was up. Nothing of importance from Australia tonight, but it's mostly the weakness of the Eurodollar, weakness of the US dollar, and the strength of commodity currencies. So the Aussie dollar is gaining quite nicely. 72.20, 72.80 a resistance, support 71.50, 70.50, and 70. Another question here. Don't think that was a big oil money driving the market, regardless of news or anything else? Yeah, we had a short squeeze in oil last week, sending it all the way to 34.80. We have lots of crazy, wild movements in oil. It wasn't. It's not only news. I agree. It's also news. It's not totally speculation, but I think it's also it's these crazy moves in oil prices. The oil market is out of balance, trying to find a new balance. Okay. Let's continue. Kiwi dollar had the backwind of the strong employment figures in New Zealand 2 days ago, and despite the fall of 7.4% in milk prices, Kiwi dollar actually was the biggest mover yesterday, 2.6%. In terms of pips, it was also not so much, but it was quite a move. It reached resistance very nicely, very nice technical pair here. 67 was the top line, remains resistance, followed by 67.90 and 69. Support is at 65.80, followed by 65. So the Kiwi dollar had its own reasons to rise. One reason was the jobs report in New Zealand. The second reason was the huge weakness of the dollar. Okay. Dollar Swiss at some point yesterday dropped under parity. Since then, it managed to balance. Remember, there's intervention here by the Swiss National Bank to weaken the franc. That might explain the bounce back up here, while all the other currencies were partying against the dollar, including the Swiss franc. We saw dollar Swiss fall under parity. Suddenly, we had this big bounce back. I believe that could be due to intervention. Anyway, if you are trading dollar Swiss, and I don't really like that, you know me, Parity still works as support. I would say maybe here this is 175 is resistance. Euro Swiss reached new highs. Perhaps we have fresh intervention here by the Swiss National Bank. Almost 112. You broke above the previous high of 111.65 right here. Okay. Euro pound. All in all, what was interesting yesterday, we had a breakdown of correlations. Okay. So we had this risk on, risk off movement. Yesterday it was all about a crash in the US dollar. Okay. Let's continue. Euro yen, the safe haven pair, is of course moved higher because of the crash in the Japanese yen. But at least against the euro, at least against the euro, the Japanese yen is a bit weaker with 131, the current level. 130 works as support, 133, 132.25 remains resistance. So the Japanese yen did strengthen against the dollar, but remained slightly weaker against the euro. The Bank of Japan's move is still worth something over here. And pound yen, more or less, well, it's a bit lower. 172 is the current level, 175 is resistance, 170 is support. I see another question, BOJ negative interest rate. Why dollar yen fell? Yeah, it did push dollar yen higher, but yesterday the dollar just crashed, tanked across the board because of Dudley, because of the ISM non-manufacturing PMI, and that also made a full reversal of the dollar yen's move to the upside. So, of course, there are worries that the U.S. economy is not doing so well, and the Reserve Bank, the Federal Reserve, sorry, in the United States of America will not raise rates, not in March, not in June, and not anytime soon. Okay. Let's continue. We talked about all currency pairs. The main ones, of course, I want to talk about. Let's talk about more events coming up today, and then we'll return to euro dollar just a bit, because I know it's the world's most popular currency pair. It was in a frustrating range for so long, and suddenly we have a move. So we have the speech from Draghi today. Let's see if I can get more headlines for you right now about that. I think, as I said, we didn't have anything. No, nothing new from Draghi. His words, of course, in the rate decision had a lot of impact. I'm sure he's frustrated from the rise of the euro. He wants a lower euro. Okay, he managed to push the euro only temporarily down in the recent rate decision, and now with this weakness in the US dollar, euro dollar is at levels that are not comfortable for the ECB. I think this raises the chances that the central bank in Europe, the ECB, will act. At 12 GMT, as I said, we have the Bank of England's rate decision and the quarterly inflation report, also dubbed Super Thursday in the UK. Yes, it could hurt the pound. The Bank of England can go dovish. Remember, when the US dollar falls, other central banks don't like it, and they could hit back. We've seen this in the most strongly in Australia and New Zealand, but also in the UK and also in the Eurozone and Japan. They are ready to act, I believe, in this continuous currency war. Carney continues reacting to detailing and answering questions about the quarterly inflation report at 12:45 GMT. At 1:30 GMT, we have the US jobless claims and a few other figures from the US. Let me take a look at this. So let's look at the figures today. We have the jobless claims expected to remain more or less the same, from 278, 200 to 280. And we have unit labor costs. It's sort of another figure that explains the job market. It's a quarterly report for Q4. It provides sort of more information about wages, about inflation, a very indirect one, not a top tier one, but this time it's expected to rise by 3.9%. So expectations are high. That opens another door for disappointment. Productivity is expected to fall. On the other hand, well, if the unit labor costs rise, productivity falls. These things go hand in hand together. Remember, these are not the most important figures. We have tomorrow. Yesterday we had really important ones: the ADP and the ISM non-manufacturing PMI. And these were hints, of course, for tomorrow's big event, the non-farm payrolls. At 3 GMT, we have factory orders. Expectations here are very low, a fall of 2.8%. If we have a smaller fall or even a rise, it could provide some room for recovery for the US dollar. And yeah, I guess that's it. Some, well, second-tier figure from Australia overnight. Is here another question about is tomorrow, well, we will see euro dollar back to 108. Well, who knows? Well, the good thing that happened in markets, well, look at this. Euro dollar is testing the highs as we speak. And really, Draghi didn't say anything new. This might be, I see here some fresh dollar weakness as in the session after some consolidation in the Asian session. We're seeing fresh dollar weakness. It's most felt against the euro and also against the Aussie and the Kiwi. So I cannot say if it's risk on, risk off. It's just general dollar weakness. Okay. Regarding tomorrow, we're expecting the non-farm payrolls to show us a gain of around 200,000 jobs. Expectations might be a bit lower now. On one hand, we had ADP coming a bit better than expected, but both the ISM PMIs came out worse than expected, especially yesterday. The employment component fell to 52.1 points, if I'm not mistaken, fell a lot. So expectations might be a bit lower. When we have lower expectations, that provides more room for an upside surprise. So if we still have an non-farm payrolls above 200,000, I think it's not that bad, and perhaps we could have a recovery of the US dollar. To have a recovery, to have a bounce back, fall back in euro dollar from 111, or even if we fall to 110 until tomorrow, all the way to 1.8, who knows? We have high volatility in markets. I like it a lot, but I'm not sure we'll go all the way down to 108. Okay, we need a really extremely positive report from the United States. Perhaps a big rise in jobs, more than 200,000, maybe 250,000, closer to December's highs. Really positive surprise, and also a rise in wages. Wages rose in December 2.5% year over year. If we have them, and it was the high level also seen in October, if we have them rise in January above 2.5 to 2.7, for example, or 3%, that could, of course, together with a really strong jobs report, headline non-farm payrolls, it could send euro dollar way down to 108. But if we have more normal figure in line with expectations of around 200,000, a bit below, another disappointing wage report, then we could have perhaps euro dollar continue higher. 112.15, 112.90, 113.75, and 114.60 are the next levels. Okay. Another question here. Good morning, Fabian. Sorry again, you're one of our regulars, and sorry again for the late start. What if the ECB will not add QE in March, but will say that they've decided to add QE in September? Effects on Eurodollar will not be bearish. Yeah, expectations are for the for the ECB to act. Okay, so I would say it's not only QE; it's also perhaps cutting the negative deposit rate. If the ECB does not act, even if it promises to act, it's not good enough. In January, a few weeks ago, they made promises. This had some impact. Now it's time for action. Okay, so the promises were surprising, but if they promise once again and don't act, it's just not good enough. The euro dollar will continue higher. They will need to act and promise to act more. But the main thing in March will be to act. We have a month until then. Okay. Other questions? So chances are defined today. If we stick above 110, we might go for 112. 1.2, the NFP? No, you mean 112, I guess. Yeah, I think we're currently in this dollar dovish, dollar dive mode. We will need a really strong NFP to change it. I don't see the dollar making a big correction today. It might correct against specific currencies. If we have another something really dovish from Draghi, which we didn't have, euro dollar could fall. If we have a very dovish Carney, and that's a real possibility, that has a much higher probability, then we could have the pound fall. If we have, I don't know, some report from China, which is very dovish, we could have the Aussie fall. But it won't be a broad US dollar correction. For a broad US dollar correction, we would need a very, very strong NFP tomorrow, okay? That answers the question. Isn't it more profitable to see euro dollar to 112 before the NFP? What the next resistance levels you see? Well, yeah, I see perhaps the wind going a bit for euro dollar to the upside, but we might have, especially tomorrow, pairs getting stuck in ranges towards the NFP, okay? Next resistance levels, we'll have to go to the daily chart. I mentioned those levels before, but it's better to see them on the chart. Too many levels here. Yeah, I'll need to clean up this mess. But anyway, 111.45 is immediate resistance, 112.15, 112.90. Really strong resistance is at 114.60. I talked about this line several times. It was the high here in May, then the high in October, and also 1,000 pips above the lows. 117.12, of course, was the high seen in mid-August on the crash in the Chinese stock market. Okay. So I talked about well, one last thing to mention. It's not totally minor. At midnight GMT, for those of you trading the Aussie dollar late at night at least here in Europe, we have some kind of report from the RBA, the Reserve Bank of Australia, and also retail sales. So if we have a very dovish report from the RBA and the weak retail sales report, then we could have the Aussie dollar falling, correcting, could see a correction there. But recently, Australian figures were quite positive, most of them, not all, but most of them. So I don't expect a disaster from Australia. Okay, these are the events for today. The Bank of England, of course, is the main event, but we're still seeing markets readjusting to the weaker dollar, the big blows that came yesterday. Okay, any more questions? Let's just do a recap of the full week. Everything actually happened yesterday, but on Monday we had mixed Chinese PMIs. The government one came out worse than expected. The private one came out better than expected. ISM manufacturing PMI that was already negative on Monday, especially the employment component. It showed outright contraction, outright recession even in the manufacturing sector in the United States. And on Tuesday in Australia, no change in rates and relatively solid statement. Yes, in New Zealand, it was quite mixed. Milk prices fell 7%, but the employment report was actually quite good, even excellent. A big fall in employment. That's what helped the Kiwi make the biggest rise, more than the euro, more than the pound, the yen against the US dollar yesterday. And yesterday we had the drama. ABP NFP was okay, but these unexpected comments from Dudley, and especially what really knocked the dollar down was the ISM non-manufacturing PMI. Today we have the rate decision in the UK, and tomorrow NFP, and also the Canadian jobs report. Comment here: London opened very bullish on euro dollar, so you see it as a stop hunting before going down. Will it break higher? I don't know what's going to happen later today, but I see a strong trend against the US dollar. So yesterday we had the move in the US session, and then in the middle of the US session, and then late in the US session. Now we're seeing, I think, a continuation. So I see more of a bias to the upside in euro dollar in general, to the downside in the dollar. But things can change. But I see more chances of the US dollar continuing to weaken and perhaps only specific corrections more likely against the pound than anything else. Okay. All right. So let's begin the wrap up for today. Again, I apologize for the late start. We had some technical issues, and I'm happy we did manage to make this session because yesterday we really had drama in markets. Okay, so this is the wrap up for Thursday, February 4th. Finally, we had drama in markets. The US dollar fell 2% or more across the board. Two main factors. First one, Dudley, number 3 at the Fed, went dovish. Not really new, but it sort of came on fertile ground. And the weak ISM non-manufacturing PMI, a poor headline result, 3 points less than expected at 53.5, and a terrible employment component showing very, very slow hiring in the services sector, the biggest sector in the United States, and a very ominous negative sign for the non-farm payrolls yesterday. Of course, this was exacerbated by stops being triggered. Okay, and euro dollar, the frustrating pair, finally made the breakout. Let's look at the big breakout here. Look at this range. Look at the narrowing range. I was frustrated for so many days, and we finally made the break higher, breaking downtrend resistance, reaching the highest levels since October, 2% higher in euro dollar. Next levels to watch in euro dollar. Well, immediate resistance 111.45, 112.15, 113, I would say, and 113.75 before the critical line of 114.60, support at 110.70 and 110. Okay, let's look at other moves. We also had quite big moves also in the pound enjoying also the talk about a deal between the EU and the UK. Also this morning resuming its rise, 145.60 to 146.50 is the current range. Today the big event comes from the UK, the Bank of England Super Thursday. Stay tuned for live coverage on FX Street for this. 3 events today: the rate decision, the meeting minutes. Watch out for the voting pattern. If we still have 8 against 1 for no change, it's still okay for the pound. If we have a unanimous 9-0 vote, it's dovish. And of course, we'll see the quarterly inflation report and the meeting minutes. They could be dovish. They could try to hit the pound intentionally or unintentionally. This is the big event for today at 12 GMT. Dollar yen, amazing turnaround. The Bank of Japan only on Friday hit the yen hard by setting negative rates all the way to 121.50, 450 pips down from the peak to the lows of 117 seen yesterday. At least the yen is weaker against the euro and other currencies. Ranges to watch here, 118.30 to 117. Okay, dollar CAD, 137.42. Despite a big rise in oil price in oil inventories, crude and distillates, oil prices did manage to recover, and the Canadian dollar certainly took advantage of this. Currently, much lower ground, around getting closer to 1,000 pips from the highs near 147, 137.40 current levels, 137.20 to 137.90 is the current range for the Canadian dollar. Aussie dollar is also on higher ground, 71.93. 71.50 to 72.20 is the current range. 72.80 further resistance, and support is at 71.50, 70.50. Okay. Kiwi dollar had one of the strongest rises, also thanks to a good jobs report. 67 is resistance, 67.90, 69 on the downside, 65.80 and 65. Okay. Quick look at the events for today, the ones that I didn't mention perhaps. Well, Draghi didn't say anything new. Bank of England decides Super Thursday. Stay tuned for live coverage. And then we have a press conference from Carney. US jobless claims, the weekly release, plus unit labor costs and factory orders could move the dollar just a bit, but the big event is really only tomorrow with the non-farm payrolls. We had big events yesterday as well. And at night, some news from Australia, the RBA report, and retail sales. Okay, before we head off into the sunrise or sunset, another question here. What news or economic data can influence the euro-dollar today? I think it's mostly reaction to the expectations for rate hike in the United States, some news from the US, and perhaps these are the things that can move euro-dollar. We don't have any European-specific release today, so it's mostly about the mood in the dollar. I mean, we did have Draghi, but that's already behind us. I think he was quite dovish in what he said, but it wasn't really different from what he said in late January in the press conference. Okay, let's take one last look at euro-dollar. Finally made the move, which finally justified its popularity. 111.45 to 110.70 is the current range. Let's see what this day will bring. And tomorrow, of course, we'll be here with the NFP. Stay tuned for live coverage of NFP, live coverage of the Bank of England, and the morning show tomorrow. Hopefully, this technical issue we had today was a one-off. Sorry again for that. So thanks again for coming. Sorry again for starting late, and wish everybody a safe and successful trading day. Volatility is much higher than it has been in recent days, especially on the beloved euro-dollar. So I wish everybody a safe and successful day, and we'll see you all tomorrow. Thank you very much. Bye-bye.